right, and welcome, friends, to today's very special FTM Insider Coaching Call. Today is Wednesday, the 6th of September. Have a very exciting day today lined up. As many of you know, we are going to be talking with Tom Cloud, who you hear regularly on our podcast every week, who has been away on vacation for the last couple of weeks in Europe, gathering both some good R&R and also some information that will be beneficial to all of us today. We'll be talking with him about several things. We're going to get started. So as always, we want to make sure that you know that you are trading at your own risk, right? Neither myself nor Tom Cloud are financial advisors. We are not investment advisors. The research tools and commentaries that are presented to our members are for educational and informational purposes only. So we do not provide professional investment advice. You should always consult a trusted investment professional before making any investment decisions. So with all that said, let's go ahead and dive in. Before we move into gold and silver, I want to provide a very quick look at the overall stock market right now. There is quite a bit of concern right now. Investor fears are growing for a variety of reasons. Of course, Congress's to-do list this month is large and well known. They have to raise the debt ceiling this month. By the end of the month, they have to pass a budget, which we still are operating without a budget, and we have for a very long time using these resolutions. The Congress has to fund the government. They need to pass tax reform. They need to create more hurricane relief for, it looks like, Texas and also possibly Florida. And also, if the Congress, if the GOP wants to repeal and replace Obamacare, they have until the end of this month, because the Senate has announced that the parliamentarian rules will change, and no longer will there be only 51 votes required. It will be raised back to the 60. So if the GOP wants repeal and replace done, they have to do it before the end of the month. Otherwise, they won't be able to do it with just 51 votes. So this is a big month as the Congress comes back, and all eyes are on whether Washington can actually function in this environment. If people begin to lose heart, if the investor begins to lose heart, then he is likely going to begin pulling his money from the stock market. Now, so far, if you look at the stock market, we did have tremendous amount of outflows, in fact, record outflows earlier in the summer. It was probably the greatest outflows we've seen in about 13 to 14 years. So in addition to the summer doldrums, we also had just simply people taking money off the table, profit taking from this massive run in stocks. However, if you look over the last several sessions, over the last probably 3 weeks, we've seen that change, and now money is flowing back in to the stock market. However, we are also seeing a lot of insurance products rising, so volatility, gold mining, and much of this. So we'll talk about gold and gold mining and all of that in just a few minutes with Tom. But before we do, I want to give you a lay of the land regarding where you are right now with the U.S. stock market. And as you can see, for those of you who've been members for a while, you know that we alert you to whenever the market changes. Look, we are not here to tell you every time the market does something, right? We're not concerned with every little thing that the market does. We don't obsess with all of that. What you need to know to be able to succeed in any kind of investment is to know whether that market is in a bull market or a bear market. So if I could put our services very simply to you, all we do is tell you when a market enters a bull market. Tom, you know this for a long time. If you get into gold mining stocks when gold is in a bull market, then you're going to do better, and you're going to do historically better than if you get into gold mining stocks whenever gold's in a bear market, right? So knowing the difference when that bull market begins, and we use technical analysis, and you can see here our track record. So we are not day traders. We're not trying to trade in the middle of the day or in the middle of the month. We want to know the broad bull market and bear market. We want to know what's going on. And so if you go back and look at our track record, in May of 2003, we called an uptrend on the S&P. In December of 2007, we said, get out. It's over. In August of 2009, we said, get back into the S&P. We got out briefly in 2011 and then got back in after about a 4-month period. And we stayed in until August of 2015, riding a huge, massive wave higher. Then we had a little bit of skittishness. 2015, 2016, the markets got real scared. A lot of volatility picked up there. Volume soared. So we kind of got in and out. We got out on the August of 2015, and then we got back in October 2015. We got out January 2016, and then we got back in July 2016. That was the most volatility we have really seen in quite some time. And so it knocked us around a couple of times. But we've been in the market now since July of 2016 and riding it higher. So right now, of course, stocks remain in a bull market, right? So they're in a bull market right now. Now, you'll notice on this next chart where we are. So if you go back to the 2000 dot-com bubble, this is the level that stocks made it to, right? Right about here on the S&P 500, that equated to about the 1500 level. The 2007-2008 credit crisis began with a massive downtrend, and the peak around that time was close to 1,600, 15 to 1,600 on the S&P 500. So again, that same area served as resistance. Well, we sailed right through that area on this latest bull market that began in 2009, Fed-inspired. Lots of money printing, of course, led to this massive rise in the stock market. And so you can put everything in context now and see how far elevated you are from the previous peaks that we have had in the S&P. So we are very, very extended at current levels. So taking a look here at a 6-month chart of the S&P 500, for those of you who have money in 401ks, for those of you who have money in IRAs, and you have money in stocks, and you're specifically looking at this stock market and saying, I'm feeling a little nervous about this stock market. I'm with you. I feel the same nervousness. This is September. This is October. This is, this is a very dangerous time for humanity, not let alone the stock market. So as we look at the S&P 500 6-month chart, we see a couple of key things popping out at us. Remember, the S&P 500 serves as a large barometer, a massive barometer as to the attitudes towards the U.S. stock market, much more so than the Dow, which is only 30 stocks, much more so than the NASDAQ, which is very tech and biotech heavy. The S&P 500 is composed of 500 of the largest cap stocks in the United States, and by and large, the majority of foreign investors and top fund managers around the world, when they think of the U.S., they think of the S&P 500. And so as goes the S&P 500, will likely go your IRA or your 401k. So it's wise to pay attention to this one metric if you're looking for one metric to watch, and that's the price of the S&P 500. That's why we've tracked it for many, many years. By the way, 3 out of 4 stocks will tend to move in the direction of that S&P 500. So as you look right now at this tightness that we're seeing on the chart, right now the concern that we have is a breach below 2,400. Right now we're well above that. We're trading at 2,463. As long as we maintain above that 2,400 level, then we are going to remain above confirmed support. However, if we do see a breach below 2,400 in the coming days, as we see a lot of the issues in Washington kind of rising, then we would say if this price can hold above 2330, then we are likely to be fine, because that is the major trend support right now for this market. 2330 is really the key number. But going down to that level will require us to slice through 2400. So 2330 to 2400 would be the key area we would be watching. If you see a breach of that at all, you're likely going to get an email from us letting you know that the uptrend might be imperiled. Right now, everything looks very kosher on the charts, despite the fact that we're highly elevated, despite the fact that there are all kinds of concerns, there really is nothing on the chart right now that signifies that a crash will happen tomorrow, right? So we have to simply follow the money. We look at the price and the volume, and right now, it's hanging tough above 2,400. When that changes, and as soon as that changes, we'll be reaching out to you by email and letting you know, of course, in our weekend briefing. So with that said, I want to turn now to Tom and bring Tom into this discussion because, Tom, I know you have a lot of thoughts on the stock market. You've been watching this market for decades, and you've also just got back from Europe talking to some individuals over there about what's been on their mind as they see the new Trump regime here in the United States. They see a lot of the issues we're facing. And of course, we also see the price of gold beginning to break out. You made a stellar call on silver, calling a new uptrend back when it was 1580. We just called a new uptrend on silver on the 1st of September. And we called a new uptrend on gold and gold mining back on the 11th of August. So all of our members got all of those alerts. So they know that right now we're bullish on gold and we're bullish on silver. We've been bullish on platinum, and we've been very bullish on palladium for a long time. We called a new uptrend on that one way back in November of 2016. So we've really seen the metals perform well in 2017. Share with us some of your thoughts from your recent trip.
Well, Jerry, it's like going to two worlds. It's so different the way individuals think there than the way we think here. You see, if you looked at since 2000 to 2017, even with gold dropping in 2013, 14, and 15, gold is still going from 256 to 1,340 for over 530%. While the stock market over the same period of time, 2017, has gone up 80%, not 530%. But Europeans know that. They look at it. You can ask 99 out of 100 Americans would tell you stocks that outperform gold, which is not true. It's certainly the last year and the year before. But so they look at it a different way. And the other thing they look at and don't understand is how our dollar has dropped more under Trump than any president in his first 7 months when he came in. And they're sitting there watching the dollar go from over 101 down to 92 and say the thing's dropped 8%. And ordinarily that'd be about an 80% gain in gold based on historical figures. But instead of 80%, gold's gone up about 16%. So it's just a fraction of what it would normally go up when the dollar fell. The people in Europe have no confidence in the United States Senate and Congress. They look at them very poorly as people that are not have the ability to make the decisions they make, and they believe the U.S. will not be the first fiat currency in the history of the world to survive. They think the days for the U.S. dollar are numbered, and that could be a year, 2, 3, 4, 5. They're not saying, but when you talk to kind of a people that I'm talking to, it just every American should hear what they say, because over there, gold is in a shortage and premiums are higher than they are here, where we can pretty easily get what you want at a very good premium. And we'll talk a little later in the show about what the cryptocurrencies that are backed by gold and silver could do to the market. But overall, Jerry, it's two different worlds. Everybody here is bullish, thinking Trump's going to get the Obama health care thing fixed by the end of the month. He's going to get tax relief for corporations, tax relief for individuals, and I personally just don't see those things happening. I don't see the health care deal getting through unless it's compromised, and I certainly don't see the corporate tax going from 35 to 15. He may get a little bit of that, and I would be very surprised if they even deal with personal taxes between now and the end of September and the end of the fiscal year. because, like you said, they have to pass a new budget. And once again, the budget is skyrocketing. It's whoever who goes in as president, nothing changes on that front. So I'm still riding the stock market. I think it's still in the bull market here, but I'm much more attuned to watching what's happening in my business and talking to people, and not just clients, but talking to professional money managers, and they all are in a very concerned mode right now that we could see the stock market tumble, but there's still people that believe that Trump's going to get all this through and the stock market's going to continue its rise, and certainly only time will tell, which basically we've talked about on your show for years. It's about diversification. It's about getting your money spread out into different areas and not having all your eggs in one basket, because certainly over the years, allocating properly has been the way to make money in all investments. So I don't see that changing, but I think by the end of the month we'll have a clearer view of where the stock market's going, and certainly gold and silver are going to go up, my opinion, either way, as we'll get into a little bit more in a few minutes.
The U.S. Secretary of the Treasury, Stephen Mnuchin, warned government will run out of money on September 29th, or by September 29th, unless lawmakers vote to raise the debt ceiling. The debt ceiling, by the way, was reached. The debt limit was reached back in mid-March, and since that time, the Treasury Department has had to rely upon extraordinary measures just to keep the United States government from an immediate default, which would, of course, be devastating. And at that same time, and at the same time that we have this debt ceiling, and of course we're operating without a budget, and the federal agencies need their funding by the end of the month in order to be fully funded for the 2018 fiscal year. The animal spirits in the stock market they're seemingly unstoppable. It seems as if, Tom, the investor class is just bound and determined to believe Trump, that he is going to pull off the unthinkable here, that he's going to be able to battle back those who have been standing in the way of reform, regulation, and all of this kind of stuff, deregulation. We even see this also at the Fed, at the Federal Reserve level. I just read this morning, right before we came on the air, that Stanley Fischer, who was a long-standing member of the Bank of Israel, and now he's the number 2 man to Janet Yellen at the Fed, he's announced his retirement. Early retirement, kind of an unusual thing, because he was planning on being on until early next year, whenever Trump has to decide whether to keep Yellen on at the Fed or to cut her loose. And there have been a lot of rumors that Gary Cohn, who is the top economic guy within Trump's administration, is kind of jockeying for the job, for Yellen's job. And we know that Trump loves debt. We've talked about that before. Trump loves debt, so you don't see him coming in and wanting to pay down the national debt and raise interest rates and actually impose austerity, do you?
No, I think he believes with all of his heart that you use other people's money, and in our case, it's the citizens' money that is being used by the last several presidents to continue to try to get their programs through, and Trump is no different. The only thing is he sees his success in bankruptcies and trillions of dollars, and he'd walk off from bills, and he thinks we can do the same thing, but unfortunately we can't. We can't forfeit, like you said. We would lose all credibility and probably going to get a downgrade on our debt anyway in the next 12 months for the reasons we talked about and some of the things I'll talk about a little later. But I just don't see it, Jerry. I don't see how you can bring enough. We have a country of 330 million people and 160 million are employed, 20 million less than we had 7 or 8 years ago, and jobs are still being transported out, or robots are taking over. So that doesn't look like an increasing tax base to me. I mean, when it's sliding the wrong way. So I'm not as optimistic that you put yourself further and further in debt trying to build your tax base to pay the debt down, and I just don't see it. Personally, I sure hope I'm wrong, but I just see us at 22 trillion. So because they'll raise the debt ceiling, and they'll raise it to 21, and he's asking for 21, 250, 21, more than any president's ever raised it. He wants to go in and put an extra 250 billion out there, in addition to the a trillion, 250 billion, and 1 trillion out there. So we're just going to watch and see what happens. But I don't see anything except the debt continuing to go up.
Want to turn your attention here, folks, to the screen here. We have a story from the Nikkei Asian Review. This was just put out. This is I'm sure you have a comment on this, Tom. I just want to read a little bit of this story and then let you comment on it as well. The Nikkei Asian Review. This has also been in the Eurasian Review and a few other journals out there, and then some media outlets as well. But this headline is not a new headline. It's just a startling headline. This has actually been going on for some time, but it's a startling headline. Headline says China sees, China sees new world order with oil benchmark backed by gold. Yuan-denominated contract will let exporters circumvent the U.S. dollar. I just want to read a few sentences from this story. China is expected shortly to launch a crude oil futures contract price in yuan and convertible into gold, in what analysts say could be a game changer for the industry. China's move will allow exporters such as Russia and Iran to circumvent U.S. sanctions by trading in yuan. To further entice trade, China says the yuan will be fully convertible into gold on exchanges in Shanghai and Hong Kong. Another thing here, the existence of yuan-backed oil and gold futures means that users will have the option of being paid in physical gold. It's a mechanism, according to Alistair McLeod, it is a mechanism which is likely to appeal to oil producers, now note this, that prefer to avoid using dollars and are not yet ready to accept that being paid in yuan for oil sales to China is a good idea either. So this is a really brilliant move on the part of China in the fact that they're making this backed by gold, which makes the move away from the dollar much easier. This is something, Tom, you and I have been talking about for a long time, the petrodollar system that the United States depends upon, the linchpin of the entire U.S. economy, that we could never survive. Our economy could never survive unless we had the kindness of strangers who were willing to accept and use and hold and demand our paper currency, that if that goes away in the form of oil sales due to something clever on China's part, where they create an oil benchmark backed by gold, I mean, this could really be devastating to the U.S. dollar. There's another statement here I'll read, Tom, that I'm sure do want your comments. It says China has been indicating to producers that those happy to sell to them in yuan will benefit from more business. Producers that will not sell to China in the yuan will lose market share. Saudi Arabia, and they bring up, so you really need to read this article, by the way, folks, if you haven't seen it. We'll provide a link to it in our show notes today for our podcast, but also you can just Google this title. Really read this, print it out and read it. It's very interesting. Saudi Arabia, a U.S. ally, is a case in point. China proposed pricing oil in yuan to Saudi Arabia back in July, and it's been unclear if Saudi Arabia has said yes. But so far, Beijing has been reducing Saudi Arabia's share of its total imports. And then it goes on, and there's one more statement here. It says, if Saudi Arabia accepts yuan settlement for oil, this would go down like a lead balloon in Washington, where the U.S. Treasury would see this as a threat to the dollar's hegemony and it is unlikely the U.S. would continue to approve, and here it is, here's the petrodollar system in all of its brutal glory. It is unlikely that the U.S. would continue to approve modern weapon sales to Saudi and the embedded protection of the House of Saud that comes with them. This all boils down to money, and the United States eventually is very likely to get out-clevered or outgunned at this little duel that we find ourselves in with China. Tom, what are your thoughts on the Chinese yuan, gold-backed Chinese yuan, and the U.S. dollar?
Well, there's a lot of comments, as you said earlier. I even think back to 5, 6, 7 years ago when you and I did a seminar together in Colorado on this subject, and I talked about in my talk that it was going to move to yuan and it would take over a decade, and here we are 5 or 6 years into it, and it's doing exactly what I thought it would do. There's no way they're going to sit around and watch us run deficits through there and have the Chinese and the Japanese that hold $2.5 trillion of our debt over, I think it's around 15% of our total debt, just 2 countries. And when they're ready to put the yuan and have it as the world-backed currency, or at least the one to be the leading one, whether you're and to come up with mechanisms like paying for it in gold and oil, make them interchangeable on a formula, like you said, all it's doing is taking away demand from the dollar. And first thing I said today is, what the Europeans think is that the United States dollar will not be the first fiat currency to survive in the history of civilization. Its days are numbered, and this is just one of the things that lets you know that, and as soon as China gets all their gold in place and they're ready, they'll be ready to take a recession, a worse recession, and raise their dollar to basically pull all their funds out of U.S. treasuries. And no wonder Fisher's running for the, Fisher and Yellen are the only 2 employees of the Federal Reserve that the government has anything to do with. Everybody else works for a private entity, the Federal Reserve, and of course they both carry dual passports, both Yellen and Fisher, and all that is part of going on. When you see the Fed saying we're not going to buy debt in a crisis, they create the money, but they don't want to buy it back. They want the U.S. Treasury to take it over and take all the debt that goes with it, if that day comes. And certainly it's not here yet. We still have the powerful financial people doing that. So I believe for several years that we were in the last decade of the dollar. We're in the last decade of the U.S. Being able to do what they do. And the only reason people are still around, Jerry, you've named it's for protection and a safe place to move your money when you have a North Korea situation and you want to move into bonds on the short term. If the guy that's got the weapons, meaning us, it's okay to put your money there short term with the full backing of the U.S. government for treasuries. But when that goes away, away goes all the treasury buyers, and they start buying gold-backed securities around the world. And even though Trump's talked about it, we've seen no progress made that we would have a either gold-backed currency or at least a gold-backed bond. But that's kind of dying in the water right now because of all the other problems. So I'm on the side that believes, just like this article says, a lot of what we read there, safety for the House of Saud and them having to trade with China. They can't afford to lose that business. So they're going to be willing to pay in whatever they need to pay in and get security somewhere else. But I believe we're definitely in that time where the U.S. dollar goes down, and a lot of biblical things are going on. Certainly we could talk about for hours to fit that in, but that's where I stand on it.
If you're just joining us, you're listening to the voice of Tom Cloud, a precious metals analyst. He's been in the business for 40 years, watching these markets. Great insights today. We've been talking about several things related to gold and also to the dollar. We're actually getting ready to get into some charts. Before we do, I want to make a quick announcement. We have a new teaching series that's going on. If you're new to stocks and trading stocks and you want to learn how to make money with your IRA, or you're trying to figure out how to actually look at a chart and make money, well, we have a ongoing teaching series right now for all of our pro traders. It's our platinum level membership. And right now, if you just want to learn the basics, it's a great place to start. We're going to be going through many courses. This first one's called An Introduction to Stock. We're going to talk about what is a stock, right? What is a stock market? The different kinds of stocks, growth stocks, value stocks, mid-cap stocks, income stocks, how to read a stock table. In fact, that's coming up next week on the teaching. Bid and ask spreads, knowing your stock's beta, what makes a stock price go up and down, and much, much more. So if you want to be a part of this ongoing teaching, this live ongoing teaching that we're doing for all of our platinum members, our pro traders, then just simply consider upgrading to that level, and you'll have access to all of those videos that we do each and every week. All right, so we're turning now to the U.S. dollar chart. We have that up on the screen here, and we can see that, Tom, you've been saying, this dollar has really decelerated since the initial optimism of Trump's election. At first, we saw the dollar rising into his election and a lot of hope that these things were going to happen, the deregulation, the tax reform, and on and on. But since that time, we've seen a lot of dashed hopes, and the dollar has really not been able to hide its chagrin. It's been falling like a rock since the beginning of the year. And as you mentioned, gold really hasn't responded the way that it typically does historically. Do you think you've never seen this happen in a president in the first 8 months of a presidency, have you? I mean, I've never seen the U.S. dollar do this.
No, never.
And
Nowhere even close.
Is this just getting back to? Do you think this is just kind of getting back to reality, or do you think there's something else afoot here? Is there something else that's driving the dollar down? Because is this just really just a letdown? Because the stock market tells us that everything's fine, but the dollar is telling us that things aren't fine. So which one's right?
Well, certainly both of them could be right for a while.
Yeah.
It's not the issue. The issue becomes, where are you going to preserve your wealth? And certainly you play the stock market, and people that follow your services are going to get hurt. They're not going to be caught in the big down trends, and that's important. But we're going to win on the gold side either way. I mean, we're in a huge wave up, and I don't. And we've waited on this for 3 years. We had to go through the down 13, 14, and 15. We went up last year, had an 8% rise in gold, no big deal. This year we're up 14% for the year, and we think it's going to be higher than that. And then next year could be the biggest year for gold based on. So I do think the dollar is doomed, but on the way there, you could see the stock market and gold going up for that matter, especially if they started printing money and throwing it out there and caused inflation to break out a little bit. But no, we're just continuing to say stay diversified and, buy the services you trust to tell you when to get in and out, because there's no wrong investment to buy, only a wrong time to be in or out of it. That's
well said.
What we have to remember.
That's very well said. That's an important thing that sounds real simple when you say it, but so many people don't get that there is no wrong investment. It's just there's a wrong time, right? There's a wrong time to get in, a wrong time to get out. Here's another chart, U.S. dollar versus gold prices since 1990. And you'll see here that, sure enough, gold has been popping, but it hasn't popped as much as you might think, as you might think it should have, when you see how quickly the dollar has fallen off of a cliff, now down below that 93.50 level that we've watched for a long time. That's major support that has been violated. We could get back down to about the 88 level. In fact, I just interviewed Jay Taylor, who's a mining stocks guy, and he even agreed about 88 is where he sees the next stopping point on the U.S. dollar. I tend to agree that's about the area we've drawn here that is very likely to be pulled back to. Boy, that would be something else. And if that happens, I would imagine gold prices will really react.
At least a third, I would say at least a third. Jay's a very sharp guy, and I would agree if goes to $13.50, you're probably done up picking up another $400 anyways, and then you're at $17.50, 18, headed toward a new all-time high, or getting near the all-time high.
Definitely. Here's another chart showing how gold has performed against the U.S. dollar since 1997. You can see that gold has by far really outperformed gold going back, at least since 2003. Of course, we could go back much further and see something different, but from 2003 on this chart, you can certainly see that gold has really just completely smashed the price performance of the U.S. dollar and has been a much better hedge than the U.S. dollar. And here's another chart showing the euro versus the U.S. dollar. Tom, you were just over in Europe. Did things feel more expensive, more cheap to you? I mean, than last time you were there?
More expensive. Everything is going back. It was like 119 when I was over there, like 20% premium over the dollar. So we were over there last year. It was like about an 8 or 9% premium over the dollar. So it was a 10% difference in 1 year. We were in Europe last year about the same time as we were this year. So yeah, there's a big difference. And people don't want your dollars either. They do not want them. They prefer you to pay in euro, or if you're going to use dollars, you charge it, but they don't want to take any physical U.S. dollar cash.
That's so true. I've seen that change in attitudes, too, in my trips to Europe. Many years ago, it was not that way. I mean, the dollar was just as acceptable as the euro, and it was no big deal. I mean, it really has changed over the last several years.
You go back to March of this year, and your chart shows it very well. When they were on a par, the dollar was rising. Trump, everybody was emphatic how great he was going to do. And I'm not knocking him, don't get me wrong, but when those things got 1-to-1, so really from March until September, October, we're talking about 6 months. The dollar's gone down 20% against the euro. 20%. I mean, it's crazy.
It's nuts. It really is. I mean, this is big time. We do, by the way, diversify with foreign currencies. Euro has been one of the ones we've been buying, as well as the yuan. Just for our savings, we don't go aggressive and speculate with foreign currencies, but we do use them for stability. And holding euros has worked out a lot better than holding dollars. I'll tell you that over the last few years. That's for darn sure. Here's another chart of the U.S. dollar, the ETF, UUP. And you can see that it had been in a down or a bearish channel here, as you can clearly see. And then it slipped out of that bearish channel just in July and got even worse. It's forming a new bearish channel. So it may try to be bottoming here. We may see some sort of rebound, a temporary rebound, but it's probably temporary given the fact that unless we see some real big changes coming out of Washington, unless the tone changes, unless something really dramatically changes and hope is re-inspired, it's hard to imagine why this dollar would begin resurging back to where it had been. Let's switch over to gold charts now. And by the way, friends, I want to let you know that we want to reserve some time here at the very end. We're going to lock out the last at least the last 5 to 10 minutes for you to ask questions. And now would be a great time to type those in. So if you have a question that you would like to ask Tom about gold and silver, that you would like to just ask right here on the broadcast, feel free to type it in, and we'll make sure that he sees it, and we'll try to get you an answer today on the call. So here's a chart of gold. We have a few more charts of gold. In fact, I'll move past this one, but you can simply see the breakout. Just to remind our members, we did call a new uptrend in gold on the 11th of August. 11th of August, we noticed the market was really finally breaking out, and so we called an uptrend. Since that time, volume has accelerated, soaring, in fact. Big volume flooding into gold. And as you can see on this next chart, this is a 3-year chart. You can really see that pronounced volume. This is what you look for when you are looking for a market that's breaking out, not only do you look for price breakout, right? Not only do you look for the price to really begin moving out of a sideways consolidation period, but you also look for it to be confirmed with excessive amounts of volume. That volume is the buying interest or the open interest in that. And so as we see that rise, we can even see all year long, volume has been rising across the board on the price of gold. This chart, Tom, I want to get your comments on this. These are just the technicals, but I'd love to hear your thoughts on this. That right now we just smashed through the 1295 to 1305 resistance. This was pretty tough. We had run into it 2 times before so far this year, failed both times. This time we made it right through, and the volume confirmed that move. But now we're going to run right into the 1350 to 1380 resistance. It doesn't show any sign of slowing, but that is an area where we ran into resistance back in 2016. In fact, we called that gold bull market back in 2016 in February. Really enjoyed it, but it ran into 1350 resistance, 1380 resistance, and it was over. That thing just turned right back around and came right back down south. So what's your thoughts about the 1350, 1380 level that we ran into resistance last year on? Do you think we have enough oomph here to get past it?
Well, I do, but in the same thing as the month of September, and the politicians are trying to do the best, do what they can, and it's going to be eyed and watched, and everybody's going to check. So the date's a little leery. I think it's going to break through that, but it may not do it on this first try or second try like it did going through the 1305. I wouldn't be surprised, but I do believe in 2017 we'll break through the next barrier and an uptrend. And it could happen this month very easily with all the problems going on with Congress and Senate and everything going on with the oil and changing the pricing and petrodollar. So there's a lot more fundamental issues, Jerry, than just the technical that you have to look at. And so in my opinion, the fundamentals are far more positive today than they were at that time in 2016. So I really view it as a completely different situation. I feel much more positive about this one breaking out than the other one.
Moving to silver for a minute, we have silver also just confirming a new position uptrend. Position uptrends, by the way, they occur on the weekly chart. And typically when you get a new position uptrend, friends, you typically will see that run for a few months, sometimes even a little longer. Some of our position trends will run for even up to a year and a half once they actually trigger and start moving. And so we called a new one on silver on the 1st of September. Our last downtrend was back in October of last year, so it's really been a slow grind, sideways grind, but we're beginning to break out. Volume is certainly improving as well. We have 1850 resistance looming overhead for silver. Tom, silver prices running up to 1850. Are you as bullish on silver as you are gold right now?
Well, it's in different ways. I mean, you look at silver, and you look at the economies are well. You look at the solar panels, and one thing we noticed in Europe, no one had to tell us, is how fast people are putting up, solar panels. And you look here, like I said, since the breakout, we've silver gotten down all the way back down to where it was up like 1% for the year, and now we've had these 2 weeks, we see it up now 12% for the year. But you've got more issues with the silver, meaning economies, demand for the solar panels, the industrial demand. So it's not, quote, money like gold is, so you get more volatility. But we do it. When I noticed my fundamental and technical things to look at, back when I issued that buy signal at 1580, I'd never been more sure of anything that we were getting ready to get a move, and I even mentioned up to 1850, which is, here we are 52 cents short of that right now, right at $18. And yeah, there'll be more resistance on this than there is to go, because big money doesn't, when I say big money, I'm talking about central banks, and they don't buy silver. They buy gold because it is a tier one investment where silver's not. So you're going to have the big money buying gold, and silver's more of the common people, millions of people buying a little bit, than it is a few people buying a lot, like you see at the upper end of the gold market. So my belief is, unless we hit a big snag here negotiating in September, is that silver will break that 1850 this year and going up over 20. But certainly I'm a little wary this week and next 2 or 3 weeks to watch it, because if there is they get a hang jury, so to say, then you're going to see silver pull back. I mean, you can see it pull back a lot. I mean, $1 or so. So I'm not quite in the position of bullishness on silver right this minute as I am gold, but I am still very bullish on silver.
Let's go ahead and wrap up our discussion here with just a couple of quick comments on palladium and platinum. We'll start with platinum here, the 10-year chart. And platinum, we just called a new uptrend on the 4th of August. Has not performed as well as palladium over the last several years. Palladium's been the big winner out of the two, but platinum has plenty going for it as well. Your thoughts on platinum, Tom?
Well, it's kind of a hybrid. I mean, it's always going to be tied to gold because it's always been higher than gold until the last year or so. And so you look at it underpriced because it's 46 times more rare than known gold deposits. So if you look at it and say if something's 46 times more rare, but it's not money, it's not gold, it's not, you do see some platinum jewelry, but the point on the platinum, the positive is the mining situation is just getting so tenuous and expensive to mine that I think platinum has to go up to near the gold price in this next run up. So it's right now about $350 behind, and you just look at platinum over a 30-year period, and platinum was probably ahead of gold 27 of those years. So we're still bullish on platinum. I had a substantial investor today move into platinum that's been in platinum 2 or 3 different times. He didn't want to get in until it got back to $1,000 an ounce. And then palladium is just it's just incredible. See what's going on there. We've been so bullish on it and put people in 300, 400, and now it's over 900, and still mining problems in Siberia, weather problems, South Africa strikes, power outages. Just everything just seems, of all the metals, palladium's had the best luck. I mean, that sounds funny to say, but it has had some luck that the other 3 have not seen as much of. I am a little worried about it trying to break through this uptrend at 1,000, and I would not be surprised to see it pull back. But all in all, if the U.S. sells through all this, just for the catalytic converter alone for new car sales worldwide, will continue to put pressure on the physical palladium market.
We called a new uptrend on palladium back on November the 11th in our weekend briefing. You can always look in your weekend briefing, friends, and check out the latest uptrends. That's what that's for, to give you what markets are in bull markets, which are not. We had a member reach out to us just a couple of days ago, and he was telling us how he uses his Agora financial newsletters in conjunction with our software to be able to know when is a good time to buy, because not every time the newsletter publisher says you should buy this stock, it's not necessarily the best time. Sometimes you might be buying too late. Other times you might be buying way too early, and that can actually be sometimes just as bad. And so our service is really designed to help you know when that bull market begins, when that bear market begins. That is the valuable information that many of our members have come to understand helps you make money in these markets. Okay, well, in these final 10 minutes, I'd like to turn to Q&A. I do see several questions coming in. Tom,
And I do, Jerry, want to mention the cryptocurrency too.
Tom, we actually have questions about that. I guess we had mentioned it at the beginning, so let me start with that question. We have two questions related to that. Well, no, we have a few more than that. I'll try to lump them all together. One is, how are cryptocurrencies viewed in Europe in relation to gold, and do you expect a gold-backed cryptocurrency to come to fruition?
That's what I want to talk about.
Let's do it. Let's talk.
Good question. There's two sides of cryptocurrencies I've learned talking to just the general public. One is what you've done an outstanding job, things like Litecoin and Bitcoin, and those are fiat currencies. You're putting your faith in the people that are issuing them and their value being stabilized, eventually having more and more people take them for payment, but it's still a fiat currency. Now, those are good investments, and you can certainly take a small percentage of your portfolio and try to hit a home run, and I think most of us listening have probably done that, but that's not my interest. My interest is what's going to happen to the price of gold and silver when these new cryptocurrencies that are 100% backed by gold and silver. I've been to a meeting in New York. I've met with people in Europe. This thing is moving, and in 4 to 9 months, there will probably be 2 to 4 cryptocurrencies out that will be backed by gold and silver. And then it begs the question, if you think about this, the FDIC out there has 3% assets to cover what they have in U.S. banks, and even if they had a catastrophe, they would take a lot more, up to 10 years to pay you back. Who in the world is going to leave their money in a FDIC bank account when they can put into a cryptocurrency that's 100% backed by gold and or silver, has audit on the gold and silver in a COMEX warehouse, and you'll pick up every paying person in the world. In Europe, they were showing me where a video where you pull your cell phone out, you're checking out from having a nice meal, your bill's $100, you put your cell phone on the machine, they takes $100 out of your account and puts $100 into the restaurant's account in 3 seconds, and then you'll get into replacing Visa and MasterCard. You'll just go there, and they'll be, do you want to charge it or do you want to have it taken out of your account? I mean, all this is moving forward, but here's the thing you got to remember. As first millions, and then tens of millions, and then billions of money move out of conventional banking into cryptocurrency, gold and or silver-backed accounts, that gold has to be bought. So you want to be holding gold and you want to be holding silver, and it's going to ramp up just on the demand alone. And what I kept hearing is this isn't, any chance is not going to happen. The world has changed, and some people like to go back and talk about 1906 and Theodore Roosevelt. He had to move the banking into the 20th century, and of course, the Federal Reserve came along 7 years later, and they thought they were moving banking into the next century. Well, we're in the same position, and it's crazy to think of the way the banking system runs today and the way you can envision it running in the next several months. So I would say within a year, you'll have choices which cryptocurrency you want to use as your banking account, and they'll run promotions, who will charge the less for transactions, and they'll even go to restaurants, and fees will come down from where they are for what Visa and MasterCard and others. So the banks are going to have pressure to either get into the game of cryptocurrencies backed by gold and silver or lose customers. So that's my take on it, in a short time, just to tell you much more detail than that, but that's just a short overview.
Appreciate that. We also have another question, Tom, from Gordon about cryptos. He says, could cryptocurrencies be taking a good share of the money away from gold bids, therefore affecting the gold price? That's been something that we've talked about before.
Yeah. No, I don't think it'll take money away from the gold bid. Certainly, every time if silver was to go to $20 tomorrow, my phone would be ringing off the hook. People saying, oh, I bought it 15 or 16, I better get out. And it seems to sometimes slow any rally down. That's the reason we like these more methodical to go through these figures we talked about on gold and silver. But yeah, if the bid runs up and gold goes from 1350 to 1850, there are going to be people that are going to hit bids and sell their metals. But it's going to be crazy because the whole time you've got these purchasers buying ever how much, and if they take in $10 million 1 week for cryptocurrency backed by gold, they've got to go out and buy $10 million worth of gold to do it. And let me say this, the ones that I'm familiar with that are under development, 3 of the 4 of them are gold only. Now, one of them that's probably the furthest behind is talking about gold and or silver. You could pick what you wanted. There'd be 3 different accounts, one for silver backing, one for gold backing, and one combination. But yeah, certainly anytime gold runs up or silver, you're going to have people hitting the bids, and the wholesalers, have to bring their bids down if they get their bid hit too much money. They don't want to hold that much inventory. So that's certainly something you keep an eye on. But as long as the trend's up, it's no different than the stock market. You don't get out unless you think there's a reversal in trend.
I want to remind everybody who's here, we're almost out of time. I want to remind everybody that be sure to download the free handout we've attached to your GoToWebinar interface there that you have. You should see it in the handout section there. You can see a PDF. Be sure to grab that before you leave. That's just a copy of all the slides that we went over today. Wanted to make that available to you. Thank you for attending. We're going to be wrapping up here in just a few moments. If you have any final questions, feel free to type those in. Tom, we have another one from Wade. Wade is saying, financially at this point, I cannot afford to purchase a physical ounce of gold. What other options are there to acquire physical gold with lesser amount of capital? So he doesn't have the $1,200-$1,300 that it would take to buy an ounce of gold right now, but he gets it. What should he be doing?
Well, I think it's probably the same way that I know. You may have to pay a little postage. We have a 1 ounce minimum to where we pay the postage, but we have several nurses that buy 1 British sovereign or 1 French franc a month for $300 to $400, but they had to pay a little postage that you don't pay if you buy an ounce. But it's worth it to keep accumulating it, because the only other choice you got is to go into GLD and a derivative, which I would strongly urge against, even though it could be helped. I'd probably rather you see you in that than not at all. But if you can afford to buy a 5th ounce French 20 franc, that's what we have several people buy them every month. And like I said, the only difference is they have to pay a little postage.
In our final moments, Tom, why don't you share with our folks how they can contact you if they want to buy any silver, gold, palladium, platinum, whether they want to put it in their IRA. I mean, all of this is available. You've been doing this for 40 years. Share with them how they can reach out to you.
Well, I mean, we've been here 41 years. You can reach us at 800-247-2812. That's 800-247-2812. And talk to Dan or Kathleen or myself, the traders. And Dan's been with me nearly 25 years, and Kathleen the last 7 since I moved to St. Simon's. So you can reach us, and in IRA we can be your broker. We can't be the custodian, but we'll give you 2 good custodians. You can pick the one you want, and you can have self-directed precious metals IRAs. And the last thing I want to say, I'm getting a lot of calls about Some of the people on the internet are talking about rare coins or here again, and they're still not. You still want to be in the bullion. When all these prices jump based on the things we talked about today, it's still a collectible, and there's nothing wrong with them except the people that sell them are telemarketers. If you do want rare coins, we certainly will get them for you a lot cheaper than you'd get from any of these telemarketers if you believe their story to be. But it seems like it's really picked up, and we're getting many more calls asking us about rare coins than we normally do. So I wanted to throw that in, Jerry.
Yeah, that's something we battled for a long time. That was really big back in the big run-up in 2010, 2011. The gold lines and many of the, I don't want to mention all the names, but all the different companies out there that were really pushing those rare coins. If you have some of those and you want to convert them out or change them for bullion coins, then that surely is advisable by Tom.
Yeah, and we'll sell them. If they're going to convert into gold, we're not going to charge them 2 commissions. We'll sell them for them free and give them every penny of the money as long as it comes to us to pay for an order of bullion, gold or silver.
I want to encourage you to reach out to Tom Cloud if you have any more questions, if you just want to ask questions about what you've heard today, or if you want to inquire about making a purchase. 800-247-2812. Tom Cloud is available for you. A couple of final announcements before we bring this to a close. First of all, we have several upcoming training series for those of you who are pro traders or are platinum members. Again, if you want to upgrade for this education, you certainly can. Just want to give you a preview of some of the things that are coming. Chart Analysis 101, simple chart reading techniques to boost your trading profits. We'll be going through this course in our Tuesday and Friday calls. Also, Market Analysis 101, learn to navigate the market like a pro, and also ETF trading basics. So many people are using ETFs today. We'll show you how to profit with those and how to use them wisely. In addition, we'll also have 2 more courses, Money Management 101, Wise Stewardship Principles for Traders, probably one of the most important courses I've ever taught, and be looking forward to this one coming up soon. This is a very important teaching in the fact that it teaches you how to pyramid in and scale out. Instead of just taking all of your money and just plopping it into one stock or into one thing, instead to scale in as the trend goes up and then to scale out as it begins to go down. Very powerful. It can really mean a huge difference in your overall returns. And also another very important training, trading psychology. Whenever you sit down and begin to start placing money into the financial markets, whether it's in gold, silver, or whether it's actually pulling the trigger and buying a stock or an ETF, sometimes you can get scared. Sometimes you can kind of talk yourself out of it. So trading psychology will prepare your mind for profits, and I'm looking forward to that teaching that's coming up. Also want to let you know that Tom Cloud will be joining myself and also David Morgan and many others at our upcoming Follow the Money Financial Summit that's going to be held in Fayetteville, Arkansas on May 25th and 26th of 2018. I want you to mark your calendars if you'll be able to attend. I know so many of you were able to come. We had a packed room in 2016 when we went to Colorado and we hosted our summit. This year, I'm going to be sharing many, many ideas. In fact, I'm going to be sharing my 3 top options trading ideas with you. Very powerful. For those of you who often you have small trading accounts and you end up oftentimes trading penny stocks, options can be a much more powerful way to use a small trading balance and very lucrative also. So we'll be talking about that. Tom, I know you'll be sharing things about precious metals as well as David Morgan. We'll have a roundtable for that. Geopolitics, going to be talking about starting an internet business and all kinds of fun stuff that's going to be going on. That's May 25th and 26th. Mark your calendars for next year. That'll be in Fayetteville, Arkansas, at the beautiful town center building. And I tell you what, if you've never been here to Fayetteville, Arkansas, it's absolutely beautiful. Beautiful mountains, breathtaking scenery, and it's a college town, so there's lots of great food, lots of fun stores, just a great place to hang out, and the hotel accommodations are absolutely fantastic. So we look forward to seeing you there. As a member, we do not typically charge for this. It's not something that we charge. If you're a member, we want you to come. So if you get yourself here You won't have to pay at the door. You just come on and be here and participate, and I promise you, you will have a very eye-opening experience and walk away with some very profitable insights that you can use forever. All right, friends. Well, thank you so much for tuning in. Tom, again, I want to thank you so much for being here today. Thank you for your insights.
Always a pleasure, Jerry. Thank you.
Look forward to seeing you next time, and everybody else, everybody have a safe and prosperous rest of your week. God bless, and we'll see you right back here next month.